parts, and the difference between the 250 and 20 EMA is that the 200 represents a longer term pattern in the stock or entity you're looking at, man. So the 50 and 20 represent shorter term trends. You understand what I'm saying? So now, how do I use this when I'm trading in the stock market? So like y'all just heard me say, the 200 EMA on spot intraday on the 5 minutes specifically tends to be a good pivotal point or confirmation that the stock is either going to keep slamming or rising above it or bounce/reject off of it. You understand what I'm